Today is Monday, August 16th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or ADM. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, Alan Bush, ADM Investor Services Senior Financial Economist, and special guest Scott Harms, Archer Financial Services Senior Ag Risk Specialist. Scott, let's start this morning with this question. We are now a couple of trading sessions removed from last week's USDA report. Anything lasting to you in the report, and how do you think it might shape future price direction?
Well, no question that the big surprise in the report was the adjustment to corn yield below the range of guesses. And, the market had to go through an adjustment period when that occurred. We start to see, and we saw prices rally. And before we were sitting in a trading range with 550 kind of being the midpoint. I think what the market had to do was readjust its expected trading range. And I think we've done that. I don't know that there'll be any major lasting impact. We've gone through the process of readjusting prices. Now we got to watch demand as we move forward and see if it can take us to that upper end of value. These are the production numbers we have to work with for the next 30 days. And, so the market will set in a new trading range, but a trading range higher than what it was in the sessions leading up to the report.
Scott, there'll be a widely followed crop tour kicking off as we start the week. What impact might this have, if any, on this week's trade?
There'll be a lot of pictures on Twitter and on social media in general that the market will absorb. But the overall impact, I think the market feels like it's going to be a little bit negative for corn in that they won't go venture into, they have no tour stops in North Dakota where some of the driest areas are, a few stops in South Dakota. So I think the attention might be on the Eastern Corn Belt where we know crop conditions are quite favorable. So I think the market sentiment has a slight negative lean as we start the week, but overall the impact is not very large. I think it's important when we look at these crop tour estimates that we compare them to previous years. We don't try to compare them to the USDA estimates. That even the team that put together this tour, they would tell you the same thing. Don't try to compare our numbers to the USDA. But I think there is probably at least to start the week a little bit of a negative lean in that the corn yields will come in a little bit higher.
Steve, let me turn over to you. What are the latest technical signals in the grains, and what is your outlook for prices post-harvest?
Well, I think that we're continue to establish mostly a trading range in the beans and the corn. For November beans, we've got support at the 1340 area. We need to trade over 1388 to get a new higher trend. For the corn, again, we have support at the 568 in the December. If we trade over 584, some of the technicians say you have an objective maybe as high as 680 for post-harvest. For the wheat, we made new highs last week after the USDA lowered the Russian and Canada crops. Support's around the 760 area. We have a target now of 828 on the December wheat if we trade higher. Meal kind of support around 355, resistance at 380. There was some reports today that China's looking for beans as their domestic users are starting to buy meal again for their hog herd. And we have a big range in December oil, 62 cents to 65 cents. If we trade over 65.50, the target goes back to 69 cents. So I think that post-harvest, we should try to put a little supply premium in the marketplace.
Steve, another question for you. What are the managed funds net position in the grains, and how does it compare to record longs in the past?
Right now, the funds are long about 100,000 contracts of soybeans. In 2012, they were long 250,000. For corn, they're long about 276,000 contracts. And in 2010, they were long 429,000 contracts. In Chicago wheat, they have now long 40,000 contracts after last week's rally. And in 2012, they were long 80,000 contracts. So I don't think they want to buy into the harvest pressure. I think they want to see China buying. But I think that given, talk about next year's carryouts as low as 125 in the beans, possibly as low as 900 in the corn, maybe 550 in the wheat, I think they could increase their positions in the grains.
Scott, coming back to you, Steve mentioned China. China has been a recent buyer of U.S. soybeans. What has this done for the bean market?
Well, it's really what the market needed. We went through a lull in the month of July where we had a period where there wasn't fresh export demand announced. And now we've had 8 consecutive days where the daily sales have been announced in the soybean market. And that's put a little bit of a lift to the trade. The market has been waiting for that, and we're finally starting to see that. We expect that trend will continue here in the short term. They haven't been China has not been in the U.S. corn market. That's the next thing we'll be watching for. If the corn market is going to make a move back up towards the $6 level or beyond, it's going to be on the back of new U.S. demand. And so that's something we'll be watching as we move forward. No question, the soybean demand of late has been a boost to the trade. We just need that trend to continue.
Thanks, Scott. One more ag question. It's for Steve. Steve, besides weather, what are some of the key fundamentals for price discovery in the ag markets currently?
I think the market is focusing first on just the new cases of COVID and the impact it might have on U.S. and global demand. I think the second thing is the dollar. And if the dollar goes up, that could slow demand for U.S. ag goods, while as the dollar goes down, could help it. And we've got ocean freight prices at record high levels. I think we also have to be watching pretty closely U.S. and China relations. It seems like they're deteriorating, and we don't know if they'll meet the phase 1 trade deal or not. So it's up to the U.S. administration to try to figure out how to handle all this human rights situation in China versus the trade for U.S. ag goods.
Interesting. Alan, thanks for being patient. Turning toward the financials, why did the S&P 500 advance to record highs on Friday, despite much weaker than expected University of Michigan Consumer Sentiment Index?
Okay, that index was very, very weak. It came in at 70.2 when 81.4 was expected, and that was the worst number in 10 years. And yet you would think that that would be very negative on the stock index futures, but in fact it was not. The thinking is that numbers of this nature would force or in one way or another influence the Fed to hold off on tapering or tightening to one degree or another. So from a point of view of how this affects Fed policy, it was considered to be a bullish factor. Of course, today we have lower prices. We have some geopolitical issues. Also keep in mind that stock index futures have had a tendency to come back from bearish news, of course, now with the geopolitical issues. So I think the fundamentals and the technical still overall on balance are supportive to the indices.
Federal Reserve Chairman Powell will be holding a town hall meeting tomorrow. What do you expect from that?
Well, I believe that he will probably talk up the economy. He'll discuss the recovery that we have seen. I don't think there will be any surprises tomorrow. I think if there are any surprises from the Fed, I think they will most likely be revealed at the Jackson Hole Symposium at the end of the month. So I would not look for any real surprises at the town hall tomorrow, but generally an upbeat feeling about the global economic recovery and, of course, the U.S. recovery.
Finally, Alan, the 30-year T-bond, these futures continue to advance in price. What's going to happen?
I think they will continue to advance in price. Even today, we had the Empire State Manufacturing Index coming in very weak. I think most reports going forward will probably be on the weaker side, and not just here in the U.S., but also globally. So I think the trend is higher for the futures at the long end of the curve, and I would not be surprised to see a move to new highs for the entire move, especially at the long end, the 30-year bonds.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.